Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 15th of October, 2019, and we're about approaching 5:15 in the afternoon, which means we're already into Wednesday's trade session. So while you see stock indices are lower, believe me, they closed sharply higher today. The metal markets were lower than this. They've come up 6 cents from the close, $1.50 here in the gold market. Now, the events of the day, well, there's so many of them. Bank earnings came out today, and that was probably the driving force that kicked the stock market sharply higher, as most of the earnings beat the forecast. That doesn't mean that, for example, Goldman didn't, but you got to understand WeWork, Uber, and there's other things. I'm not a stockbroker, so I won't get into all that. Suffice to say, the earnings proved a positive surprise. You were down earlier in the day in the crude, the Brent, and you're getting a bounce, as you can see, a nice bounce that you've had, and you had a good bounce in the nat gas. Now, Brexit, that's another situation we should look at. And the British pound, while it's down 14 points tonight, was up 206 points on the settlement price. And that's because at the very last minute, it appears that they have figured out a draft to present tonight, which will be a tomorrow debate for the European Union meeting in a two-day session in Brussels. Can they reach an agreement? These things seem to go to the very last minute. Got my fingers crossed. I think we'd all like to see something positive come out of that. So let's take a look at where we're at in the weekly area chart of closes, and we're up for the week through tonight, which is already the early Wednesday trade, remember, up 25 points as the market's sitting nicely. And that first test of the 18-week moving average was successful. The market has bounced away. The negative on this chart is this. We still have a pattern, as you can see, of lower highs on a closing basis. And we certainly had the lower lows, and now we've had the higher low. Do you see that? Visualize this. Lower highs on a close, and now we've had reactionary highs. That's all good action. Markets narrowed in right here, trying to figure out what to do next. When I step back and we look at a daily bar chart on the S&P, you had a resistance zone back here that carried through all the way into this area. We're now up and challenging that area. We haven't gotten through it, and that's going to be very important for this market to get some endurance to the upside if that's going to happen. Just because some banks reported today and they were good doesn't mean you have the power to get through all that. However, as a chartist, throw away the name of the chart. You have a pattern of higher lows, higher highs. That's bullish unless the market gets up back under 29.5375. So from where the market's at, roughly 40 points lower is the danger zone of the market if it gets down there. Where's the market finding support? Well, it found support, if you take a look on Monday on the breakdown, into the 29.54 zone. You rallied up today, and tonight the market is sort of sideways here. So we have support in two levels at 29.5425 and back at 29.38. The dilemma is if you get down and through this 29.5375, the pattern will change to a higher high, lower low, which takes away that bullish enthusiasm right now. Where's resistance? If you look at the upper Bollinger Band, the number's 30.23, which fits right into this past resistance level, but that also would get you over that key number of 30.13 if it closed over there on a weekly basis. Not there yet. When we take a look at momentum, it's overbought. So we have a market that's in an uptrend with higher lows, higher highs. The bias is up because you're over the 18-day average of closes. You are overbought, and overhead resistance is 30.2350. When we take a look at the NASDAQ, and I'll come back to yesterday, in fact, right here, you can see how the market corrected. We had a down day on a Monday, often, not always, but often. You get Tuesday reversals. You had one as the markets in Canada reopened, the U.S. reopened. I think Japan even had a holiday. All these markets reopened. They liked what they saw, and the markets went up to the upper Bollinger Band today. And tonight it's just trading against that. But like the S&P, we have an uptrend with upside bias, overbought. And if the market were to fall back to these support zones, that it doesn't have to do, but if it were, it would lose the uptrend in the sense of the swing line. You'd have a higher high, lower low. In the Dow, You've got the pattern of higher lows, higher highs. Again, you challenged yesterday, that 18-day average. You surge forward today. I'm looking for resistance in this old area of those highs. We'll see if the market can even get up to it. That'll be an important event. You're down about 9 tonight in early trade. The Russell's the hardest chart of all these. It does have a new pattern of higher lows and higher highs that was formed by the close of business on Tuesday. So now we're fighting at the 100-day average, which we challenged the other day, fell back. That was Friday to Monday, up on Tuesday, just hanging here right now, and these two resistance zones. This market, as I said, has been the weakest. It had gotten down to its lower Bollinger Band back at the beginning of October, and since then it's really not had much in the way of downside pressure. Can it add to this is going to be the question, but I think the pros, they're looking at this resistance. The market's not quite in overbought territory. Got to be over 70 to get overbought. In the cash VIX, I am going to be surprised if the pros don't. You heard what I just said. If you get down to the lower Bollinger Band, wherever it is tomorrow, I'm looking to see if the pros don't write some puts down there, thinking the market's going to have that resistance. This is a big support area. As I've said repeatedly, it's one thing to sell a call when a market can move from 20 to 25 easily. It's very different when you sell a put. I'm not saying it can't go to 8. Show me when it did. That's the big difference. It's harder to break down in these markets than go up. Doesn't mean it's not going to happen, but I would expect to see the pros writing some puts and then coming back up here and trying to cover them on the first bounce. In the T-bonds, we've literally gone from an upper Bollinger Band to a lower Bollinger Band. Now, if the Fed is going to cut interest rates, then I ask myself this. You know, we are at the 15th. The end of the month, we have the FOMC meeting. The market just hit a downside target for all purposes. It's oversold. How much downside's left if the market thinks the Fed is going to cut interest rates again? Maybe that's not what they're going to do. Support, as I see it, comes in between the lower Bollinger Band, the 100-day average of closes. If the market were to get back over this 161.24, it probably means the market's going to, at least to me it would mean, that the market, whenever that occurs, maybe it's saying, okay, we've gotten a bit ahead of ourselves in front of that meeting. I don't know. The trend is down in the notes. Lower highs, lower lows. The bias is down. You're under the 18-day average of closes. The downside momentum is oversold. Strong support, 129.09 to 08. The combination of the lower Bollinger Band, excuse me there, 100-day average. It's allergy season in Chicago. We have had our cold weather and the plants are screaming, get Ira. If you look at TLT, lower highs with today's action, lower lows, so you're in your downtrend. You are right now, you got to 139.55 today. The lower band's 139.66. You closed 139.75. I think the pros were covering shorts today because, as I teach, I think the first challenge of Bollinger Bands, be it to the top side or upside, is often a zone where pros take some money off the table. Being oversold is also a concern of mine. Then we get to the dollar index, which had an outside day down. Now, the trend has been with lower highs, lower lows. The resistance is the 18-day average. Should you take out today's high, either on Wednesday or Thursday, what happens is that becomes what I call a bear trap, and the market most likely tries to get into this 18-day average, this whole zone, to figure out another plan of attack. If you can drop here and get follow through, the lower Bollinger Band at 97.84 becomes the first support zone. If it breaks through there with any real strength, 97.17, the 100-day average becomes important. The flip-flop is occurring in the eurocurrency, which is already open tonight. You have the higher lows, the higher highs. You're in an uptrend. Clearly, you're overbought. You have a reading here that's coming in at 80.46. Any reading over 70 is actually overbought, unless both numbers are going sideways over 80. And resistance is 111.08. When I come to the British pound, you keep popping on this upper Bollinger Band. There's been hope that this market, by the way, it's had a vertical price run, but there's a lot of hope that something's going to get done. If it doesn't, you're looking at a market that you know is already extended when you're over the upper Bollinger Band. The odds of staying it are 5% of the time over it. So on the close on Tuesday, you were up 200 points. On the close yesterday, the market was underneath, way down here. So you have basically one close over that upper Bollinger Band. Yes, 95% of the time you close within them. You can push that band out a little more before you retreat, and you are overbought. Dangerous situation because you have no control over how these talks are going to go, and if they don't go well, what does Mr. Johnson, the UK minister, do on the 19th when he's supposed to ask for an extension? The ball isn't in Brits' hands. The ball is in the EU hands. What do? In the Japanese yen, you can see how risk-off is taking control of this market. You fall in the yen when it's a risk-off situation. In other words, you don't need this for the risk play in this market. It's risk-on in stocks. You want to take risk in those other markets, and that's what you're seeing. Interest rates in the U.S. are not going down sharply. They've been climbing recently, putting pressure on this. Is it ahead of itself? It might be, but it's had a big change of fundamentals. In Bitcoin, you can see where the 18-day average of closes are. That is the resistance point as I look at the market. When you're under it, you have downside bias. You would hit way back here the lower Bollinger Band carried, and then you had a rally that began carrying, and I'll call it a contra-trend rally since the bias was down, back to the 18-day average and just hanging here. More, as you know, of the original people that were coming in, the pay vendors have backed away from the Libra event. That has put some pressure on this market. We'll see how that all turns out now that they've lost MasterCard, PayPal, Visa, and so on. In the Brent versus WTI crude, you're still taking the premium to the upside. There's nothing that's been resolved between Saudi Arabia and Iran. But when you come to the energy markets, they've been under pressure. They had a rally that happened on Friday that had no legs to it, had a big reversal. And since then, we stayed under the 18-day average, but I don't see a trend. I see that the market had a swoop to the downside, a big one. Then it went sideways, tried to rally, and it's caught in no man's land right here. You've got no swing line pattern. You have a higher high and a lower low, resistance at the 18-day average, momentum going flat and biased down. When we come to WTI crude, you've got the lower low, higher high, the market showing its resistance point, but is it trending? I don't think so. I think you got the bias down, the swing line without a trend, and momentum flat. We then get to gasoline. And in the gasoline, you're trying an uptrend here. You've had the higher lows, higher highs, and you have been fighting a battle between staying over the 18-day average, coming down to the 100-day average with that combination, and holding it. Right now, the bulls are in control, and if you fall back under this, it's still okay. You'd have to take out this low way back here to break this pattern, but the bias is what this trade is all about. Then in nat gas, all I've been looking for was when you lost the embedded reading right here for this market to make a run back to the 18-day average of closes. And it's the 18 since it's the closest of the major moving averages. You can see what it's done now, and as far as I'm concerned, it's hit that number. It's now back into a neutral status as we're waiting to see the next event out of this. You know, I talk that, but I also look a lot at this popular trading tool. It's called a pivot point. And I probably learned about pivot points, I want to be conservative, 30 some odd years ago, maybe longer. And we used to do them by hand. We didn't have all these fancy computers to do it. But I remember who taught me this. I won't use the person's name. They became quite famous with this. And what it was is a formula designed to give you resistance points above a market, support under it, and the idea was you were going to contra-trend trade it. You're looking to be a seller at the resistance to get out at the pivot point. Sometimes you're looking to see if the market, you bought, say, there, and the market continued to fall. You might buy more contracts down here, looking to get back to the even point. There's many ways to work with it. I added momentum to this in my video campaign with it many years ago. I have a 3-part video. It teaches you the formula, short video, a couple of minutes, but explains the concept. Then I teach you how to plot on your chart, and the last part of the video, the third one, teaches you how to use momentum with it because it's meant for one thing. It is meant purely as an entry exit point for day trades, or if you're already in a position, maybe it gives you a reason to look and say, maybe it won't reach that point on my chart. This is where the market's fighting. Maybe that's my exit or whatever point you want. There's many ways to use it. I let each person decide, but the first thing on my part is teach you this concept. Go to our website. You'll see under free offers pivot points. We also have the Arun indicator, which takes price and time together. It's a very interesting indicator. You can also click up here to get to our free offers and then take advantage of it that way. I'm Ira Epstein. You have a good day, and I'll see you all tomorrow.